Hello, everyone, and welcome to this week's edition of the Grain Gauntlet. We are taping this right after the February USDA supply and demand report. No real surprises, very little market movement following the report. So let's just get to the 5 questions for this week. You ready to go, Pat?
I'm ready.
Okay, question number 1. Where do you see things going for U.S. corn and soybean farmers the next few years?
All right, that's a really good question. One of the things I see is that the Trump deal hopefully will buy us time. Hopefully we get the 25 million metric tons of sales every year for the next 3 years, because there is no question that the market is changing. China is going to buy from South America long term. Let's face facts. Right now, if they buy the extra 8 million metric tons that Trump has said they were going to buy, they'd be paying about $100 million more at current price levels to us than to South America. That's crazy. Why are they doing that? Because they need us, and you have been talking about forever, as a customer to buy their junk. But they can't keep doing that, and that's crazy. So long term, fundamentals have changed. South America is producing too many soybeans. So what I see happening is I don't see a big switch from corn acres to soybean acres in any of the years in export. What I see is our government and our foundations in the world focusing more and more on getting corn used in different ways. Ethanol, obviously, ethanol exports, so that we can eat up the corn acres, because we're just not going to have it in soybeans. On the soybean side, domestic demand is fantastic. We need to keep that going. These are the adjustment years we're going to see. Less total production of soybeans, more domestic use of soybeans, and in time, that ratio will be where it should be and we'll be back to normal. I think it's going to take a couple of years, this year, next year maybe, before we get good prices without a major drought somewhere in the world. So we really have to focus on adding 10, 20, 30 cents wherever you can. Long term, this is a good thing for the U.S. because we'll be way less dependent on foreign buyers and more focused on exports of other products that we make from corn and soybeans, and more diversified. So that's where I see it going, but I don't see the switch back to where it was with acres.
Okay, good. Yeah, that's some clarity. And Trump even said this himself right from the start, that this is about finding new areas for demand, domestic demand. And I think you made it pretty obvious that this is just a temporary fix to kickstart things and change the dynamics back in our favor. But long term, we have to find more domestic uses for these products.
Yeah, demand change is always painful up front, right?
Yeah.
But
Right.
it should lead to more stability long term, and that would be a good thing.
Right. Okay, good. Do you think you are too optimistic about price potential?
I think the whole marketplace is too pessimistic. I look back at 2016 through 2019, one of our most flat, boring, depressing markets that we've ever had, right? Ending stocks in corn, for example, 2.2 to 2.4 billion bushels. We even had times where we're looking at potentially 3 billion, but demand kicked in. We always rally somewhat, so these naysayers that said we're just going to stay flat for the whole year, that's unrealistic. It's a very low probability. Now, we did have 1 year back in, I think it was 16, that we rallied 40 cents from the March low. That's not really a great rally, but it's still 40 cents. This year, that would be back up to 450, right? And I'm talking about after February 1st rally, okay? So we should see that kind of rally at least. The market will give us some opportunities. We have to take advantage of it. But if you think we're going to have a high price of corn and beans in the fall, you're fooling yourself right now, okay? The bottom line is we're going to plant a lot of corn acres. We're going to plant enough bean acres. And with a switch to a strong El Nino, that typically supports above trendline yield. And the weather guys are pretty positive on this switch to a strong El Nino. So you can count on big yields again this year. we got to start focusing on new crop hedges, especially in corn. So that's where our focus is switching to. Expect to buy back to work. If it's conservative, I expect better sales, but we really got to start to focus on locking in new crop, especially corn, because we're going to be planting so much more corn and soybeans.
Okay. All right. Why don't you set price targets like many other marketers?
I hate price targets. The reason is they only work 1 out of 10 times. If you go back in history and look at it, if you set a price target, 9 out of 10 times that's too low of a price. You set it above the market starts to rally, you get hit with your sale, and then the market rallies 50 cents more. Every once in a while, if you set a good price target, and how do you set a good price target? You're just guessing on how high it's going to go. Let's say you set a good price target at $11.50 for beans the last time we rallied. That would have been a great price target. But how many people would have set it at $11.50 and not $11.10 or $11.20? You can almost always get the price target later in the marketing year, except way at the end of the year. You hire us to watch the markets every day. We watch 40 hours, 50 hours a week. When something strange happens, if it's something that doesn't look like it's going to hold, we can send out a broadcast and get you guys in 2 minutes and you can make the sale. That's why you hire us, to keep watching it. Don't set price targets, get hit prematurely, and think it's going to be the win-all. It's not. It's just not.
Right. Yeah. This is actually a question that I fielded, and you and I talked about it soon after. And yeah, the response I was able to give is setting a price target, and let's say it's with the elevator and it gets hit, they have no more flexibility. Whereas we have the flexibility. We're constantly looking at us. We're able to adjust. If a number in our mind is hit, we can then reassess the situation at the time and decide, do we want to proceed forward? And that's the kind of flexibility you want, so you don't miss out on an even bigger move.
Right. And by the way, I always set price targets.
Right.
But I analyze what's happening at the time to see if that's a legitimate price target or if we need to change it to a higher level. The Trump rumor that we're buying 8 million, getting 8 million more metric tons bought from us from China, market went up 50 cents. Who in the world had their price target 50 cents higher that day? No one. Okay, so what do? We got billed 30 cents higher because we didn't believe it was going to last that long. Okay, and that was above my original price target, about 10 or 15 cents. So we took it. You got to let the market do what it does and look at what's causing those moves so that you really do get the best price that you can. Guys that get price targets, put them out there, usually come to us as new clients because they're not getting the best price.
Okay, good. Is the dollar driving the grain and oilseed markets right now? Just a note, the dollar has been bouncing back after plunging to 4-year lows. So is the dollar driving grain and oilseed markets right now?
72 or 76% of the dollar index is what you're talking about, is made up of the euro. We don't trade with the euro, okay? We trade with South Korea, Japan, China, Colombia, and it's a dollar's relationship to those individual countries that dictate the strength of the U.S. dollar versus those currencies. Again, heavily weighted towards the euro, so it really has very little effect as the dollar index. Now, the strength of the U.S. dollar will cause our products to be more expensive for other countries, right? And that definitely affects it in the long haul. But the movement back and forth hasn't been a big whopping move one way or the other that's going to have any kind of significant effect. So the answer to the question is no. Right now, it's not having any effect.
Okay. All right. Final question this week from a prospect. Most of the people around me have sold out of last year's beans. Should I get 100% sold too?
Yeah, if you do what your neighbors do, you're going to end up with what your neighbors get. And the whole thing in farm marketing is kind of an unchristian thing, right? You got to beat your neighbors in order to survive, right? That's really the case. So you don't want to get what your neighbors get. You want to get the best price you possibly can. The market's kind of holding the gains we've had after the Trump announcement that 8 million metric tons from China are going to be bought this year. If that comes true, we're going to be significantly higher. Those that are sold out are going to miss it. We're 75% sold at above the average cash price to market is being called for by the USDA. So we're at a good place. We can take a little bit of risk with it. And we always have a second chance, the last 25%. Market doesn't rally and we sell. We can always hedge that 25% and add 30 cents or 50 cents when it goes back down. So you always have more opportunities. So don't put all your eggs in one basket and sell this early in the year when there's a whole year left, a whole 8 months in the marketing year left where we could get a significantly higher price.
All right. So, and to be clear, you're thinking it's when this reference is made by private analysts that farmers are mostly sold. You think they're most basically talking about being priced, right? Not necessarily have already delivered and if their bin's empty.
I don't know who came up with that, but I think it's an exaggeration. I do think it's more pricing than actual sales, but I've been calling my guys this last week and a half, asking them, and I haven't heard anybody say more than 75% where we're at. I've heard guys say less.
Yeah.
So, we got 8 months left in the marketing year. How does the whole marketplace sell the soybeans? I know they could be sitting in price at the elevator. That may be a higher percentage than normal, but I think it's an exaggeration overall. I think we started slower than normal. Most guys like to have 70% priced off the combine and do forward pricing, and this year we're way behind. So maybe people are being fooled by the fact that we've had a lot of sales lately going to the elevator because we were behind to start.
Yeah, sure. Okay, good. Well, that's it for this week. Thank you, everyone, for the questions. Again, not much of a change in the USDA today with February's report, though it's typically not a report that offers a lot of changes. And the market isn't doing much in the aftermath either. So thank you, Patrick. We will see you guys again next week, and take care, everyone.
And if I was a little fired up today, it's because we got to do a really good job this year. And doing such things as target pricing isn't going to get you there. It's very important that marketing is on top of the game this year because you guys just ain't going to have a whole lot of extra room. And so it's very important for you and your families that we and you get the best price we can.
All right, good. All right, sounds good. See you next week.